Kenya's private sector activity was broadly steady in April, but did show summer growth. The Stanbic Bank Kenya Purchasing Managers Index has come in at 50.1 during the month, ticking up from 49.7 previously. A reading above 50 signals growth, and the improvement comes as price pressures eased across most sectors. BP Eni joint venture and Rhino Resources Namibia have signed an agreement for 42.5% interest in a block in the country's offshore Orange Basin. Several oil giants, including Total Energies and Shell, have invested in Namibia, which plans to open up major frontier basin, with the recent offshore finds ranking amongst the largest this century. Now, fuel and electricity prices have surged in Zambia. This is as the Energy Regulation Board recently announced a 14% hike in petrol prices. That comes into effect on the 1st of May, prompting concerns about the country's inflation outlook for the rest of the year. Joining me now to unpack this in greater detail is Sub-Saharan African macroeconomist at Absa CIB, Ridle Markus. Ridle, always a pleasure, and a good afternoon to you.
Good afternoon.
Brilliant, Ridle. Maybe we can start off by just taking stock here of Zambia's inflation picture to date before these increases. What kind of a journey has it been?
Well, Zambia's, unlike many other markets last year, probably did not see as much inflationary pressures in the early parts of last year. However, towards the end of the year, the water level started to drop. The agriculture seasons started to see much lower rainfall. And the impact was that at the beginning of this year, in February, President Hichilema declared the drought a national emergency or national disaster and emergency. It turns out to be the driest in nearly 40 years that the agriculture sector has experienced. On the back of that, we saw inflation started to increase. Inflation for April stood at 13.8%. And food inflation, more importantly, is nearly at 16% and continues to rise. In the meantime, we've got delays on the debt restructuring. We've seen the currency coming under pressure because the current account deficit is putting pressure on the currency. And the currency is now probably also close to a record high of nearly 27 kwacha to the US dollar. So, central bank had to respond, and they hiked the policy rates at the February meeting by another 150 basis points after hiking towards the end of last year too. And also the cash reserve requirement was hiked by nearly 900 basis points earlier this year, trying to protect the currency and trying to rein in inflation. So not a great time for Zambia, I'm afraid, because of the drought.
And then, of course, now we're seeing these fuel prices and electricity. And let's talk about how that plays into the picture you've already painted for us, also, Ridle. But now it feels like even more pressure on the Zambian consumer and business at large.
Yeah, certainly. Keep in mind that, you mentioned a 14% increase in petrol prices, but kerosene prices, which is used by households, up 39%. And then on top of that, the electricity price increase of 10% for consumers and 17% for the commercial users. So we think that inflation could actually worsen from here on and go up to at least 15% over the next, in the current quarter even. And that would force the central bank to perhaps hike the policy rates even further, potentially by another 100 basis points at the May meeting. The next meeting, of course, is early next week. And on Wednesday, we'll know what the decision has been. But consumers will just be put under further pressure because of it. The biggest issue here is, of course, that while the drought is being driven by El Nino and it's impacting at least 6.5 million people, we just don't know how long this impact will be. We don't know when the rains will return. We hope that we'll see better weather conditions in the second half of the year, but there's just no guarantee. In the meantime, they have to import power. They've got a huge deficit of at least 740,000 tons of grain, so that has to be imported as well. And of course, mines have to now, use less power, so production of copper is being impacted, or they use diesel generators, and diesel, imports will increase. Either way, current account is under pressure, currency comes under further pressure. Not a great time.
It does also sound like there's lots of uncontrollables here, Ridle, with, for instance, a climate change. Who can help that? If I also just think of what we might be seeing with the delays in the debt restructuring, of course, if the Zambian government had it their way, that would be advancing much quicker here. It does leave this economy in a bit of a limbo for a while, and that possibly tells us we have then no timelines to tell us when they might see an ease or relief of this high interest rate, high uncertainty and high inflation environment.
Absolutely. And I think the key word that you used there is limbo. It's putting the economy in limbo. We're waiting for, for range to return. As I said, they've got nearly 6.5 million people impacted. Government has already said that they need at least $940 million to provide some relief. So they might have to borrow that. Public finances are under pressure. But again, if the debt restructuring is completed, they're in discussion with commercial creditors at this point in time, that will be a positive for the economy. But it still does not guarantee that fund managers, international fund managers will invest in this economy. Hence, it could delay the recovery in the currency. It could delay the recovery of copper production. There's just so many uncertainties. But, at the same time, the economy is well supported by the World Bank and the IMF, etc. So we hope that that the support will at least put a cap on the depreciation of the currency and limit the impact on inflation, and that we will see a much better second half of the year than what we see so far this year.
I'm also asking before I let you go here, Ridle, it does seem to have been countries that didn't have an inflation problem when the rest of the world was seeing inflation surging. And I'm wondering, based on Zambia's story, could there be some African markets that are late to the inflation, surge firstly, and then to the inflation fight?
So, interesting that you mention it. We've seen the East African countries also being impacted by the El Nino effect, and they're getting too much rain, causing lots of flooding and damage to crops, etc. But they're in a very different cycle. The inflation is being has come down because of base effects in some way. We might see further policy rate hikes in a country such as Uganda to support a currency and also fight inflation there. But their inflation is still at, just at 3.2%. Kenya inflation is at 5% and on its way down, especially because of the stronger currency. But some of the markets that are experiencing inflationary pressure include Angola, for example, where inflation is over 26%. Nigeria, too, inflation is 33%. And Angola and Nigeria, along with Zambia, are the three countries that stand out in terms of inflationary pressures and where we could potentially see further policy rate hikes. So, not Zambia is not alone in all of this. There's a couple of other markets for very different reasons, perhaps more on the line of reforms that's causing subsidies to be removed, and that's causing fuel prices to increase, and not as much driven by the impact of the El Nino or climate change, perhaps. But still, not great for several of our markets where we are expecting policy rate hikes and lending rates in general and inflation to be elevated throughout the remainder of this year.
Well, Ridle, always a pleasure hearing from you. Thank you so much for taking us through this one. That was Ridle Markus, Sub-Saharan African macroeconomist at Absa CIB.